Thank you for tuning in to the Invest Charlotte Leadership Summit. You're about to watch panel number 1, Tech Overload, how technology and financial services presents opportunities and risks, and how leaders are navigating the future. Be sure to like and follow for more content from the top business and thought leaders. Enjoy.
Thanks, Abby. And thank you, Tom. Thank you for hosting us this morning. What a wonderful facility. As Abby mentioned, I'm Mont Hamrick. I lead our teams here in Charlotte and in the Triad for Comerica Bank. We're always thrilled to work with Abby and the Capital Analytics team to host these events across the country. It means a lot to us. Capital Analytics does a great job. It means a lot in our business. So just a few comments about Comerica and our continued investment here in Charlotte. Many of you already know us as a national commercial bank. We're based in Dallas, Texas. We operate in 17 states. We have deep historical roots in the Southwest, in the upper Midwest, and in California. Last year, we celebrated 175 years of continuous operation as an independent firm, which is pretty amazing, really, for any company in our industry, and we're very proud of that. Our company is always focused mainly on closely held companies, their owners, family offices, nonprofits, and individuals. Over the years, we've also added industry-leading teams in wealth management, in real estate, technology, equity sponsors, and environmental services. So we serve all of these segments with state-of-the-art platforms, but most importantly, with highly experienced local talent, which brings us to Charlotte, the reason we're all here this morning. Over the past several years, Comerica has invested substantially in the southeastern United States. Our largest part of that expansion is here in Charlotte, where we're home to our growing teams in commercial banking, treasury services, wealth management, real estate, institutional trust, and other services. So like you, all of you in this room, we see Charlotte as a great business climate for the future, but it's also a great home for our current teams and those that we will add here, and also many of our team members that have moved from other parts of the country that see Charlotte as a great place to live and raise a family. The growth of our commercial banking business here, in particular in Charlotte, has been among the most significant of any market of ours across the entire country. That says a lot about Charlotte. We really expect that our broader team here will double, if not triple in size in the next 2 years. We've really enjoyed along the way building relationships with so many great companies and organizations and leaders in Charlotte, many of whom are in this room, and it is terrific to see you all this morning. But I think more importantly, and Tom mentioned this as well, we've been blessed by a Charlotte business community which has been receptive to open dialogue with our teams. We're honored in the partnership too, as importantly, with several community organizations and nonprofits in our efforts to always give back to the community. And that's a hallmark of what has made Charlotte great. So as an event sponsor, we're really glad that you're here this morning. We hope to spend more time with you in 2025. As Abby already mentioned, you have a great panel ahead touching on technology in financial services and professional services. Let me turn it back over to Abby for an introduction of that panel. Thank you to you all for being here this morning, and thank you for your support of the Charlotte community. Have a good morning.
Well, good. So let me just set the stage for our first panel. Today, we'll be speaking with the leaders to my right from Charlotte's financial and professional service sectors, all of whom are playing key roles in shaping the future of the city and the region. Our discussion will focus on the growing impact of technology in financial services and how companies are positioning themselves for success. As we explore the unique challenges and emerging technologies in both internal operations and customer-facing strategies, this conversation is essential as we examine how technology is reshaping the financial landscape in Charlotte and beyond. So I'd like to first pose a question to all of my panelists to set the stage. So Charlotte's financial sector has a rich legacy, yet it's clear that the industry is undergoing a transformation led in part by new and emerging technologies. From your perspective, what significant challenges have you observed with the region's banking and financial landscape that point to further tech innovation, and how are businesses adapting? Would you like to start, Leigh?
Sure. I think that, technology has become sort of the key to all banking relationships is going very much in a technology direction, but customers really want that personal touch. So I think as you look to the evolution of technology, I really don't see technology shrinking necessarily the jobs or the landscape of the banking community here in Charlotte, but it's just going to be a different approach. You're going to see broader employees. You're going to see a lot of tech employees within the banks and really helping them develop a technology-driven personal banking relationship.
Excellent.
Maybe to level set for a moment. My name's Ted Wolfe, as Abby said. Thank you for having us, Shane and Abby and Tom. You know, at TowneBank, we're about an $18 billion regional bank, but we operate really, we think, as a super community bank. And I think the perspective that I'd like to bring is from on the ground. If you look back, I'm going to age myself here. When I first started in banking, talk about change. How many of you have ever seen a carbon copy? I mean, you see CC on your emails. I don't see very many hands going up. I mean, we used to handwrite promissory notes and actually write in the amount and the rate. Everything was done manually. You fast forward to now, and it's just been incredible. Everybody knows that. You look at our market here, you see fintechs like Avid Exchange, Red Ventures. You see other ones. There's a whole, I guess the word around now is ecosystem for fintechs. You see companies in this area, especially because we got a lot of young faces out here, and you all are the ones that have adopted technology. Some of the older guys like me, I still have my 18-year-old to help me out at home with technology. But the reality is, the cool thing about technology is it's getting more and more user-friendly and more prevalent everywhere. It's ubiquitous. I mean, you look at the ability now to integrate your ERP system with your payments to vendors, with your receipt from customers, with your management of information. It's all moving at a very fast pace. So I think because of we've got a huge talent pool here in Charlotte. In fact, at TowneBank, our headquarters is in Suffolk, but we really operate as a local bank. We've got folks that we're hiring in the technology sector that are going to live right here because they want to live in Charlotte. And because of that, we see a high level of adopting use of technology. It's still uneven. There are still segments, individuals and businesses that have not gotten to that point yet, but we see it as our responsibility to help those clients, and we call our clients members, to help our members to be able to utilize that technology in an efficient manner that helps them while we continue to use it to lower our cost and pass that on to them.
When you were talking about the carbon copy, I still remember like the credit cards went back and forth, and then you walk away with it like very, you couldn't even read it almost immediately after it was done. And I remember also my dad taking me to the bank and like filling out the little deposit slips and everything. Yeah. And now you have it all digital. It's mind blowing to think about all the developments that have happened and how quickly indeed it is changing right now. Ron?
No, I think you make some interesting points around just the speed of adoption, as well as how integrated merchants are with their banks versus in the past where you actually had to go to the bank and make deposits and any of those types of things. I have a check sitting in my house right now from 3 months ago that I haven't deposited because it wouldn't work through the app. And I drive by the bank all the time and I just won't stop and go in. And I imagine that a lot of people don't even step foot in the banks anymore simply because of that same thing. We're looking for that ease of use. I think about some of this from a merchant aspect and just my own experiences walking into different places. And just like you said, people don't see carbon copies or won't know what those are. Soon we'll be saying the same thing about $20 bills. People, if you were born after the pandemic, you probably haven't picked up a dollar bill or a 20 or a 10 or $100 bill in a long time. Maybe some of you have. I haven't. And I imagine that when we go to many of the merchants out there now, there's so many of them that are cashless. And speaking from a credit aspect, which is the industry I'm in, that is one of the first things that I noticed is that in the past, it was harder to find, it was more often that you would see merchants that don't accept cards. Now you're seeing more merchants that don't accept cash because they want to make that experience as streamlined for them as possible. And like me, that doesn't want to go into a bank to deposit a check. They don't want to take a bag with them into a bank and deposit a bunch of dollar bills or 20s or any of those types of things. And in the past, there was a higher barrier for entry for those systems in order to do checking out of their customers. The barrier for entry has lowered a lot, but one of the things that we do have to think about is who does this leave behind? Because there's still a portion of our society that still operates in cash. So I think those are some of the things that we have to think about as we look at where innovation is going and who is leaving behind and how do we catch those folks up.
Absolutely. And looking at the current landscape, also posing it to all of my panelists, despite the banking world's rapid digital transformation, there are still hurdles to overcome, particularly customer trust and regulatory compliance. How can financial institutions and firms in related industries ensure that they maintain customer confidence while innovating? Maybe I'll go backwards to forwards. Ron, do you want to start?
Sure. And part of my role as a servicing process leader is around governance and making sure that we have business controls in place for the vertical that I work in. One of the things that we look to do at Synchrony is co-create. And sometimes that co-creation has to happen with the customer base that you're looking to impact. And if you're not doing that and you're making those innovations in either a fishbowl or in a vacuum, you pick whichever one you want to pick, then you run the chance of leaving your customer base behind and having bad experiences for those customers. I think sometimes we make the assumption that everyone knows how to do something from a technology standpoint. And I've certainly been in customer experiences. I had one yesterday with my Delta app. I'm an Android user. It seems like there are not a lot of those out there these days. And my Delta app was it's just not very friendly for Android users. My business phone is an iPhone. So I compared the experiences, and it's a very different experience if you're an iPhone user. And it made me feel like Delta had a better appreciation. I still love Delta. I'm flying them this evening. But it made me feel like there's just a real bigger emphasis placed on the iPhone experience because so many people use iPhones versus the Android experience. So I think ultimately, if you're co-creating with your customer base, you're thinking about all aspects of your customer base and getting feedback from them at the same time. You're able to not only innovate, but you're able to do it in an incremental manner where it doesn't disrupt or create any issues with your core business model.
Ted?
No, I really appreciate that answer. I think that is that's a point that I think you're going to hear over and over again on this technology topic is the need for that personal connection with your client. So from my perspective in this question, our chief technology officer talks about this. If you picture a band and you're stretching it, there are two poles on that, two opposite poles in a way. One is the technology and the competition, the access to information. You want to maximize that access to information, both for your internally at a financial institution and for your customers. On the other side is the security and regulatory risk that you run with all of that. And there's a stretching, and there's a point where that stretch is too much and that band snaps. So as an organization, you really have to balance the two, and every company has to make a decision. What level of tension, what level are you comfortable with? And so that also implies that as you increase your technology, which is a given, we're innovating constantly. I can tell you at TowneBank, we're a very personal kind of organization, and that's the way we deliver our services. But we have to be committed to innovation constantly. But what we're always having to keep in mind, those two have to work in lockstep. You can't be pulling across technology innovation and not bringing security with it. Those two areas within an institution have to work lockstep and together. So two different perspectives collaborating constantly. But at the end of the day, on the ground, the way we see it is we've got to be able to bring these this education and these ideas to our members, to our clients, so that they're aware of what their options even are. And that's overwhelming for a lot of folks, just hearing all the options they have. And that's where our job is, to be a consultant and help them figure out what do they really need and what do they not need.
And Leigh?
No, I agree with everything that's said. I think it's interesting. We work with clients a lot on regulatory issues. Banks are becoming more and more technology companies, which does not fit the mold of a bank regulated company. I think there's a lot of education that's going to go on between the banks and the regulators over the next few years. And then I think security is going to be critical. I think, listen, data leaks, cyber attacks, those are going to happen. There's just no way around that. But I think your response, your ability to notice it quick, your ability to stop the damage is going to be critical. And how you handle that with your customers is going to build trust, because it's not a matter of if, it's a matter of when. And your response to that is going to really govern how your relationship with your regulators goes and your relationship with your customers.
Absolutely. Now I'd like to drill down a little bit and ask each panelist some individual questions. And Leigh, I'll start with you. Forvis Mazars recently launched loan pricing PRO to help commercial lenders with strategic pricing decisions. What broader role do you see data analysis and AI playing in risk management and financial decision making?
Yeah. When I was preparing for this panel, I came across a very interesting fact, is that the technology that consumers value most is the technology in their cars or related, like navigation apps. But number two is their banking apps and other related finance apps. And so the value in that is, that and the customer base for the banks is probably one of their greatest assets. And so when you step back and look at, you're seeing a shift, not everybody. I think there's clearly, not everybody is a technology adapter, but you're seeing more and more people, rely on their apps and other technology for all of their banking relationships. And banks have access to a tremendous amount of data, spending habits, economic trends, just you name it, they have access to that. And so, in the past, products offerings, servicing offerings tended to be more a one size fits most. And when you were pricing that out and looking at various servicing offers for your customers, in some you price people out and you lost customers. And in other situations, you maybe left money on the table because people would have done more, they wanted more. But now you have the ability with AI to really cost effectively and efficiently harvest this data to really look at smaller subsets, very small subsets of, different customer base with similar characteristics, or even really drill down to the individual level to say, what's most important to your customers? What are their financial goals? What are their current financial situations? And how do we push that out to them? How do we price that? How do we add value to them individually so they don't feel like I'm just getting, AI generated, spam pop-ups on my app, right? Like it really is going to be, I personally think when you look at the next, not even years, like months to years, right, of banks that really get the more competitive advantage is going to be the ones that really develop that personal relationship with their customers, even though it's all going to be through a technology interface. I think, when you look at the regulatory side of things, there's, when you're harvesting that much data, when you have access to that much data, when everything's being done online, it's going to present risk. So with, with the beauty of AI comes the bad side of AI. We're seeing a rise in cybercrime because AI teaches you how to do it in a pretty short period of time. And so, when before you were really dealing with lines of defense against somewhat sophisticated cyber criminals, it can be someone that just spent, the afternoon on their computer and they're coming up with scams to get people to give them financial data. So you have a different approach with respect to risk, but also the benefit of that is that you can use, we're seeing more and more of risk management utilizing Gen AI to come up with scenarios, to come up with case studies, to understand how to respond, to look at the data, to look at people's spending habits, to quickly identify fraud and respond quickly. So I think what you're going to see is twofold, right? You're going to see banks take that AI and the data and really use it to the benefit of the customers and make that be personal. And then they're also going to use AI to be more efficient, cost savings to really drive risk management.
Sometimes it feels like the wild, wild west with AI. You got the bad guys using the AI and the good guys using the AI, both trying to manipulate the data to go further into their mission.
Right.
It seems almost like an impossible task sometimes,
Right.
certainly. Ron, with Synchrony's acquisition of Ally Lending in 2024, broadening the company's reach to new merchants and borrowers, how do you see Synchrony's digitally enabled products shaping the future of consumer lending? And what opportunity and risks do you anticipate as fintech innovations continue to disrupt traditional financial models?
I think and I'll start the last part first. I think the biggest opportunity is access and being able to dig deeper into that access. I think we're operating at a time where there's so many different generations that are consumers and the workforce, all of those things. And there are certain generations that want to do everything from their phone. And because they want to do those things from their phone, we want to make sure that we are phone enabled for customers to access credit through those channels. We always say at Synchrony, we're digital first, but we're not digital only. And because we're not digital only, we always have to think about those that don't want to go through those innovative channels that we have out there. I looked at some data the other day around a number of customers that do credit applications in our IVR, which means you're calling into an automated system and you're answering questions. I didn't even know we still had this, but some reason it came up during an audit we were doing, and we looked at the volume and it came through. It was 10 over the last year or whatever. And I thought the number was interesting. And we, instead of decommissioning it, we said we have 10 customers that want to use this technology or lack thereof. So we need to keep it in place. But the same thing goes for paper applications and things of that nature, where certain people would rather write things down and put out an application in that way. So I think the Ally acquisition, wonderful acquisition. It works with everything we're trying to do from an installment standpoint. It works with everything we're trying to do in terms of growth of our business as a whole. They have technologies on their end, and we call them legacy lending on our side because they're not part of Ally anymore. But we look at the legacy lending platform that they have that we're looking to integrate into Synchrony, and it allows us to get into that installment space and be innovative in that installment space while also being able to cross-market our other products with those customers, whether it be from a wellness standpoint or a home and auto standpoint. So you get all of those advantages from an innovation standpoint because you have access to more information, but the risk still exists around making sure that and I'll say this over and over again, that you're not leaving certain people behind, you're not leaving customers behind as you are looking to build in different technologies. So it's always that balancing act, and the balancing act becomes bigger when you bring in the regulatory concerns as well. But ultimately, what we want to be able to do with that Ally acquisition, as well as our technologies associated with it, is create a space where we're going to meet the customer where you want to be met. If you want to apply via paper, we want to meet you via paper. You want to apply over the phone, we want to meet you on the phone. If you want to do it on your phone, we want to do it for you there. So I think ultimately, and I don't even consider it being all things to everyone. I think it means you're looking at the landscape of the customer base and being able to adapt to that customer base.
And Ted, TowneBank has built a reputation around relationship banking and personal service. As financial institutions increasingly integrate AI, automation, and digital banking solutions, how do you see TowneBank balancing the adoption of new technologies while preserving its high-touch service model?
Yeah, I love that question because it really underscores for us the importance of the relationship with the individual. I appreciated, Leigh, your comments. We really believe strongly, and we're kind of doubling down on that in terms of the need to have a personal relationship with our members, our clients. Technology is a given, and we are in with both feet, and it's not going to stop. But we believe that technology is a tool to augment our service towards our members, our clients. It's got to be focused on them. And so, the job of the relationship manager, and notice we use the word relationship manager, not banker, because it is a relationship, it's going to change. It's going to change what their role looks like. It's going to continue to evolve into more and more of being a consultant versus taking information and doing things with information. There's going to be a time when I think, in talking with our chief technology officer, it's already happening, where underwriting and there are pieces in the back room that are being done very quickly. And so that allows the relationship manager to spend their time having, discussions that are more big picture in nature and trying to come up with solutions for the members versus getting caught in the information exchange. So we see that as really important. I will also make a point that with technology and the financial services industry, we put billions of dollars into security and continue. That's like one of our top things. And the bad guys recognize that. So what they're doing, and Leigh kind of talked a little bit about this, they're now targeting you as the end customer because you don't have all that. You don't typically, a lot of you don't have an IT department. You don't have someone that's on top of fraud all the time. And, we obviously you've got AI that you're using, but we in the industry, we've kind of deflected a lot of those attacks to you. And what we're seeing a lot of is the social engineering, the business email compromise, getting into your systems. We hear it all the time. People, they're tapping into individuals and that interaction between human to human in these companies. And when they find out about misappropriation of funds, or whether it's business email compromise or whatever it might be, social engineering, and money has been sent or is in the process of being sent, they need to be able to get a hold of a human being who's competent and compassionate and can take that time and figure out, how do we stop this? And how do we protect our members? So that's going to be a huge component, along with the technology and the background that you talked about, Leigh, of monitoring and looking for those anomalies that are red flags.
Well, certainly there's been so much wonderful information on today's panel, and I could continue asking questions all day. But to wrap up with one last question, what is one key piece of advice that you would offer to financial leaders in Charlotte and beyond, and how to succeed in the age of rapid technological disruption? And how should leaders balance innovation with tradition as they look into the future? Leigh, I'll start with you.
I think we've all said it a little bit. I mean, technology is a given. I think staying on top of technology is going to be important. I think deploying technology such as AI that's very agile, right? So you're not having to change systems that take 2 years to do it and hundreds of millions of dollars, right? Like, there's being able to pivot very quickly is going to be important, because the things that existed this morning aren't going to exist or will have changed by the end of this panel. So I think in keeping your risk management function in place too, but I think it'll be very important to keep the personal touch as well. I think you have to balance that. People's finances are extremely personal. And so I think the person that wins finds the balance between the appropriate technology and the person and the relationships.
Absolutely. Ted?
I back to my comment about technology needs to be viewed as a tool, not as the end all be all. Sometimes we get excited about these shiny objects and they become a distraction to what our real mission is. And so it's really important that we do that. Otherwise, that tool becomes a master instead of a tool. And you create a Frankenstein that can create problems in your relationship with your clients. And so that has to be in the forefront. And then, we just firmly believe that technology is something that we've got to utilize for the benefit of our members. And that's really a mindset.
Absolutely. And Ron?
Listen, I think that ultimately it's inevitable from technology. I think one of the things that I would encourage leaders to do is look at where there's balance relative to technology and the speed at which you're implementing it. What is table stakes versus what's going too far over your skis in terms of technology, because you can create friction in places that you don't intend to create friction. The other thing I would advise leaders to do as you're looking at integrating different technologies or even leveraging different technologies, get some naysayers in the room with you to challenge your thinking about it and how you want to go forward with it, and make sure that you're answering all of the questions from those that might push back on you, and you don't get so engulfed in your own idea that you're not looking at all of the risks that are associated with it. And I think we've seen banks in the past go forward with some of these things where they've implemented it, didn't think about it, and then they're all over CNBC because they had some type of issue with their technology and they had to walk it back. So I think get the naysayers in the room, get those that are challenge your thinking on it, and look at a responsible speed at implementing it.
Absolutely. Well, Leigh, Ted, Ron, thank you very much for your insights. And while I grab you for a quick photo, please give my panel a round of applause.